Sorry, network was really disturbing. So this is what I did when I woke up in the morning. I saw that the market has really moved in a good direction, and they left a nice fair value gap to trade. So I quickly marked out my fair value gap here. Let's assume that this hasn't happened yet. This but hasn't happened yet. I woke up and it was only this candlestick and this one here. This hasn't happened. So I marked that candlestick. I marked this fair value gap out. So fair value gap means the space between candle first and third candlestick. This movement here at the market left a whole lot of full candlestick. So here is the fair value gap from this candlestick to this third one is the fair value gap here. So I marked it out and then I left the chart, waited for it to either take out this fair value gap and then go to this other block, or give me or go 50% of that fair value gap, 50% of it. This line here, this line here, this line here is the 50% of this fair value gap. Let me show you how to put the line sorry, mark here, middle line. See that the line is out. So if you want to put it on your chart schedule, go back, close the line, and then click OK. The line is back. So the market I waited for the market to go back here and give me 50% of that fair value gap, or take it out to this other block. So remember, this is day 1, day 2, day 3. I marked it out on day 2 and then left the chart. I waited on day 1. I didn't take any trade. That was on Wednesday. On Friday I didn't take any trade. On Monday again I didn't. I entered the trade on Monday. That was on 25th on Monday. So I entered the trade on Monday. So this whole day 1, 2, I didn't take any trade. I just marked out my fair value gap and then left the chart. So on 25th I saw that the market has moved to my direction. Market have went 50% of my fair value gap here. The market opened here, went and gave me the 50% of this place. Remember, what I was looking for is a sell opportunity, because the market is actually coming down. It's a downtrend here. From here it's coming down, so I can assume it's a downtrend, right? So yeah, I saw this and then I marked it out. I go to my I went to a lower time frame, like 4 hours. This is 4-hour time frame. This is a 4-hour time frame. That's it, right? So this is what my point of interest is. This is where I'm targeting. This is where I'm targeting. Sorry. Okay, this is my point of interest. Here now is my point of interest. So I have to mark it out. Mark out my point of interest. That is where I'm targeting to sweep liquidity. So my back to my 4-hour. We say here's my point of interest, and then here is where I'm looking to take the trade from after waiting for about 2 days. Remember, all this why I haven't taken any trade. I was just waiting for the market to give me what I want. Remember, the market will give you the opportunity every day to trade. You might only see I might only see one opportunity in a week. Yeah, there is so many opportunity in the market, and considering that you have so many currency to trade, this is just GBP and CAD. If you go to other currency pair, you can still see opportunity. For me, I was just focusing on this GBP CAD, you see. So after waiting for all these candlestick to go back to the 50% fair value gap, so it happened here on 25th, yeah, on 25th. So I waited, and yeah, it happened, also giving me another fair value gap here. I marked it out. Yeah, I told you fair value gap is the space between the space between the third and the first and third candlestick. You see, from this first and third candlestick, here is a nice fair value gap. So that is to tell you that yes, the market will still come back to fill all this imbalance, and then to come back to my direction. So yeah, it happened here, and then to my 4 hours I saw this again, and then I went to a lower time frame, like 1 hour again, to confirm what is happening. Okay, yeah, remember, this is where I am looking to target. I'm looking for a sell to target here. This is my 1 hour candle, 1 hour time frame now. So, and this line, this window line now, is my entry target. That is 50% fair value gap. So that is my entry target. So I went down to this place, and then yeah, I saw this happen. But remember, I didn't enter this trade here. Why? Because I saw that there wasn't enough velocity in the market. There wasn't enough move in the market at this place here. Should I say it because of the time frame? Let me see. I guess I didn't enter the trade there because of the time frame that this happened. Hold on, let's knock it out so we don't get confused. Please make sure you watch this video over and over again to understand this. This is where I'm looking to enter the market. This was where I was looking to enter the market, but unfortunately I didn't enter from here. I entered from here. Why? Because this place, there wasn't any movement that happened after this candlestick closed. It didn't give me a candlestick formation I was looking for to enter the trade, so I have to wait for that formation to happen. You see it? So I have to wait. Meanwhile, I was still checking my time, because you still have to do with time. I used this Osago as time. Sorry. Okay, yes, look at it. See that here is Sydney section. We have New York, London, New York, and Sydney section. The Sydney section, this GBPCAD don't move well at that section. So you see that was why this ranging happened here. So I have to wait for the next day. That was on 26th. Yeah, for the next day to enter the market. That was on 26th. So I entered the market from this place. So me seeing this bearish engulfing candle, I went to a lower time frame to remember. If you're taking your trade, you go to a lower time frame to point out your entry target, either your what is it called, your candlestick formation or chart pattern in your lower time frame to enter from. So here now you see this place gave me an M pattern. You can see it, right? So when you see an M pattern, when you see this form, you see this, so what comes in your mind is something like this to give you that M pattern. You see, right? So this in my 15 minutes time frame gave me that, but that, yeah, gave me that. That was what I was looking for to enter at the market, because I already have my 50% discount on the fair value gap. So I was looking for that chart pattern to enter the market. I told you I only trade chart pattern in the market. If you don't see chart pattern, you don't see any reason to enter, you don't enter the market. I hope you are following. So this is what this was the chart pattern. And another thing, this is my target, right? This line here is my target. This line target, and see it has given me another line here. So I'll consider this as my take profit one, take profit one, and take profit two, TP1 and TP2. Though I didn't put take profit one, I took take profit two. Or if you want to take profit here, it's actually nice. You can target this liquidity. For me, I took my take profit here. That was why the trade took me about 5 days to get to my TP. See, so from my 15 minutes time frame, I waited for after waiting for a chart pattern formation, and I have to still wait for another conference to back it up. That is candlestick formation. So I saw another what is it called? Sorry. Alright, yeah, I saw another bearish engulfing here in London section. You see it? This happened in London section. So another bearish engulfing here in London section here. So that session is when the London lies should be 8 a.m. Nigerian time. Yeah, when the London people start trading. So I have to enter the trade from this place after the closing of this candle. So I entered from there. I set took my sell. Remember, I was looking for a sell opportunity. All this while I took my sell from here, and my risk was about 25, maybe 20, was about 25 pips here. So my risk. Remember, risk is the amount you are willing to lose in the market if the trade goes against you. My risk was 25 pips. There is it here, and my target was this place, about 100 pips. Yeah, there were 105 pips here. So this was the trade. So after I entered the trade from here, after that trade, the market has given me that bearish engulfing, so I entered the trade from there. The trade went and didn't close that day. It took me about it took me about so network is disturbing. The trade took me about 6 to 5 days before it get to this sorry, fuck, network is disturbing, like okay. Yeah, the trade hit TP on 1st of April. The trade I took on 26th of March, 26, 27, 28, 29, 30, about 5 to 6 days. See it. So during that period, I wasn't trading because I was already on the trade. I was holding a trade, so I wasn't trading. I was waiting for this trade to hit my take profit. So let's say I took this take profit one, I would have still been in profit. I still be in profit here. I still went with about 1 to about 1 to 2 ratio. But I was very sure that the market will come back to this to strip this liquidity. That's it. So that is it about this trade. And then yeah, what I did again was to adjust my stop loss. You see how my stop loss is this red line. Sorry, let me use this arrow. This red line is my stop loss. From here to here is what I'm risking in the market. Let's assume I am trading with 0.1 lot size. 0.1 lot size should be $1, right? Yeah, so let's assume I'm trading with $1 per lot, so means I'm risking $25 on this trade, risking $25 to make $105. See it. So this was my stop loss. What I did was when the market moved down to this place, I moved my stop loss there. I tightened my stop loss to break even. You see, I moved my stop loss to B. Moving your stop loss to B means taking your stop loss from where it is to this place. So here now I'm risking nothing in the market again because my stop loss is at my break even. I'm risking nothing in the market again. Remember, I was risking I was risking I was risking 25 pips this whole place from this red place. So what I adjusted my stop loss to my entry where I entered the market, risking nothing again in the market. See it. So I was risk free. That was why I was holding the trade, because if the market goes against me, I will lose nothing and I will gain nothing. So I was risk free. So I waited for about 3 to 4 days before the market hits my take profit. Yeah. See it. So this was a massive win for me. It was a massive win. Yeah. So if I was trading with if you're trading with $1 per lot, risking 25 pips, means you're risking $25 to make $105. But if you're risking $2, if you're risking $2 per pips, that is times 2. That means you're risking $50 to make about 200 and something dollar. Right? Yeah, right. So that was the trade I took, and I was very happy I took the trade. So that my little analysis on GBPCAD I took, that went well for me. So please, I hope you watch this video and over and over again to understand the analysis. Remember, first I went to daily time frame. I went to daily time frame, my daily time frame. Yeah, I went to my daily time frame to start the analysis from, to look at my point of interest, where I entered the market, when I'm going to trade. To know what you're going to trade in the market, you have to go to a higher time frame. So I know the market direction, you know what the trend of the market is. If it is uptrend or a downtrend, that is where you find out from your higher time frame. You will not be able to know what the market is doing in the lower time frame, like 15 minutes, 5 minutes. No, the market will just kick you out because it's happening in a short time frame. But if you want to know where the market trend is, you need to go to a daily time frame, your higher time frame, weekly, daily, or monthly time frame to know what the market is doing. So sorry, the network is bad. I first went to my daily time frame and I saw a nice move in the market here. I was really interested to take this trade. So remember, the first day I just marked out here my fair value gap in the first day. I didn't take trade for 2 days. I was just looking at the market to know what is going to happen, if it will go my way. And eventually it went my way. It gave me 50%. It went 50% fair value gap. Like this line went there, and then I targeted this liquidity. So that is it about this trade. Just watch this trade over and over again to understand, so you will be able to make your analysis on your own. I didn't draw trend line here because I know already what is happening. I know the market is going down, so actually a downtrend here. That was why I was looking for a sell. If it is an uptrend, you look for a buy opportunity. Yeah, but this one is an downtrend, so I was looking for a sell opportunity. Thank you.